Welcome to Investors Insights, episode number 127 for the week of October 5th. Greg is not with us today. He's out in client meetings. We missed him in the debate this morning, but it's the three of us. But Greg wanted me to wish you a great market week, and also if you have any questions of him, please feel free to call him here at the office or email. Today we'll be discussing a wide variety of topics. We had the debate this morning. Part of that is economics from third quarter and going into fourth. Bobby's got that. Trey's going to look at the jobless numbers a little bit, and we wanted to bring you up to speed on the recent developments of a vlog topic that we had earlier in the year. So we encourage you to connect with us on Facebook, Twitter, email us, call us. We love hearing from you, and we appreciate all that you're doing to forward to both use it yourself and forward it to others. So let's jump right into the topics from this morning.
I'm Greg Powell, and this is Investors Insights.
You're listening to Investors Insights with President and CEO Greg Powell and the Portfolio Strategy team at 5 Plan Partners. Rolling 3, 2.
Bobby, end of third quarter, kind of give us an update there and going forward.
Yeah, so September third quarter, it was ugly. There's volatility was the theme, as it continues to be the theme with the slowdown in China, the Fed uncertainty, even emerging markets. Emerging markets really took it on the chin. Emerging markets were down 33% just in the third quarter. And so that's a significant pullback in global weakness. And so looking forward in the fourth quarter, I want to go over a few things, what's good and what we see as a negative. And so what's good is the housing sector continues to be strong. Consumer confidence is still strong. Lower oil prices. 2/3 of our economy is consumer spending. And so low oil prices, better consumer spending. And so there is some good news out there and some good things we're looking at. In terms of negatives out there for the fourth quarter, obviously with the continued Fed uncertainty. And so obviously with the jobs report, Trey, I know you're going to talk about that later. And then also the manufacturing is a concern. Some of the numbers the manufacturing sector are concerning to us, are lower than expected. Also global weakness and uncertainty in China continues to be a theme. And
just can't seem to get off of that.
Yeah. And the higher dollar, what that does to the multinational firms with earnings. We're starting earnings season this week, and so we'll see how that goes. And then obviously the jobs report came out lower than expected on Friday. And Trey, you had some good information on that.
Yeah, it was interesting. So the jobs number came out at 142,000 new jobs were created last month. But and that was well below expectations and well below trend, which has been around 200 to 250,000 jobs a month. The real downside, though, was that they revised the previous month's jobs numbers lower as well. How does that impact? Why does that matter 1 month? Why it matters is that impacts two things. One, it impacts expectation for the Fed, and it impacts complete growth expectations. Bobby reported, I think, last week we had 3.9% second quarter GDP growth. Yeah. A lot of people are having to revise down their third and fourth quarter GDP numbers based on that Friday jobs number. If people aren't going to work, then it's hard to see a lot of growth. Internally, I know we had a lot of discussions Friday and over the weekend and continue about revising our growth expectations down. Coming into it, it looked like the U.S. was the strongest economy in a weak world. Is this an indicator the U.S. may be weakening as well? What also might be a tough indicator is, so on Friday we saw kind of the volatility. The market started down with bad news being bad news, and then ended actually positive. It's kind of a disjointed market on Friday, kind of showing what the disjointed market was last quarter. You had different swings, different things causing it. We saw the market sell off because of bad jobs data, and then rally looked like because of weakness in the dollar, which Bobby discussed, impacted third quarter earnings. The dollar weakness won't help third quarter, but it could help fourth quarter earnings with weaker dollar. And we saw some. People thinking, well, the Fed can't raise rates. Is that good for the economy? Is that bad? Is it because of U.S. weakness? Is it because of international weakness? Just a lot of moving parts now that we thought the U.S. economy was stronger. Now it's more in flux, and that's what we're watching. And in terms of what could cause U.S. economic growth, I know we talked this morning. Some of you talked about a lot earlier in the year about positive trade deals and how that's moving forward.
Well, and the more you look at it, it almost seems like we'll need something like that to help break out a little bit, to sort of, if nothing else, change the news cycle, as we say. Trey's right. Early in the year, we brought you some information on the Pacific Trans Partnership Trade Agreement among 11 countries that pretty much, ran the Pacific from Chile up to the United States, Canada, around Korea, and down. Does not include China, but they've been meeting the trade representatives in Atlanta for the last 5-6 days. and it looks like a tentative agreement has been reached. We told you, which would be great for the U.S. economy, particularly in the export market, and particularly key industries like agriculture, for example. One thing we've noticed about that, we told you in the vlog in that Pacific agreement earlier in the year, the two largest holdups were automotive, because you have so many different parts being made in so many different places. It's just harder to negotiate that. But the key sticking point, if you remember in the vlog from earlier that we brought to your attention, was the intellectual capital, or the patents, if you will, the intellectual property right on biologics and pharmaceuticals. U.S. has a dominant world position in that because of our research capabilities. We were trying to hold on to that for about 12 years until generics could come out. The Australians were really the major trade negotiator on the other side. They wanted 5. It looks like now, with some congressional influence probably, that you're going to settle in about 8. So that biologics and that smart capital, if you will, was one of the major things holding the agreement up. And that was primarily between Australia and the United States. And it looks like it's going to be complex, but that's going to get solved. We'll say, though, we've had so much discussion with you lately about the politics Greg's brought up to you, about the debt ceiling debate. Everything else is going on. Trey mentioned the highway bill. This is yet one more thing that has to go to Congress for approval. You know, Obama's very much behind it, but how many Republicans are? So this puts yet one more thing, as Greg would say in the political cycle, late, that's going to be market impactful, we think. One more thing to watch. So as you can see, we're dealing with a lot, and that's market impactful. Like Greg always says, if you like what you see on the vlog, let us know. If you don't like what you see, let us know that too. But we wanted to let you know we really appreciate you watching, using it, and passing along to others. And we hope that you have a great market week, and we look forward to hearing from you. Thanks.
More information at fiplanpartners.com. Securities offered through LPL Financial, member FINRA, SIPC.